Hello, QQQ is currently trading at 687.990 and remains in a pullback. Today, we're taking a deep dive into every major QQQ drawdown over the past 5 years. Our criteria are straightforward: any decline of 10% or more from a rolling high is classified as a major drawdown. Over the past 5 years, QQQ has experienced 5 such drawdowns. 4 have fully recovered, while the latest has yet to return to its previous high. The overall pattern is clear: the median decline lasted 57 days, while the median recovery took 84 days. The largest single drawdown reached 35.62%, highlighting the extreme volatility of Nasdaq growth stocks. Let's quickly break down these 5 major drawdowns. The first was the major bear market correction from November 2021 to December 2022. QQQ fell as much as 35.62% over 404 days and then took another 352 days to fully recover. This was the deepest and longest correction of the 5. Throughout 2022, the Federal Reserve raised interest rates 7 times by a cumulative 425 basis points, lifting the federal funds rate from 0 to 0.25% to 4.25 to 4.50%. It was the most aggressive tightening cycle since the Volcker era of the 1980s. The Fed also began quantitative tightening in June 2022, withdrawing up to $95 billion in liquidity per month. Meanwhile, the 10-year U.S. Treasury yield surged from around 1.5% to above 4.3%. The second drawdown occurred between July and August 2024. It was a sharp, rapid correction. QQQ fell 13.56%, bottomed in just 28 days, and fully recovered within 91 days. This was a classic short-term liquidity panic, triggered by a Bank of Japan rate hike that led to the widespread unwinding of global yen carry trades. The third occurred between February and April 2025. This intermediate correction in the AI rally saw QQQ decline 22.88% over 48 days before recovering in 77 days. It was the most severe correction of the AI-driven bull market, primarily triggered by sweeping U.S. reciprocal tariffs and escalating trade tensions. The fourth lasted from October 2025 to March 2026 and followed a slow decline, rapid recovery pattern. QQQ drifted lower for 152 days, reaching a maximum drawdown of 12.19%, but recovered all its losses in just 16 days. The main drivers were shifting expectations for interest rate cuts, persistent uncertainty over the policy path, and escalating geopolitical tensions in the Middle East, which kept risk premiums elevated. The fifth and latest correction began in June 2026. QQQ took 57 days to bottom, with a maximum drawdown of 11.32%, and has yet to fully recover. The main reasons are growing doubts about the expected returns on massive AI-related capital expenditures, along with stronger-than-expected resilience in the U.S. economy, which has led markets to sharply scale back expectations for interest rate cuts.